So now guys, let's take things to the next level. Okay, and let's talk about candlestick patterns, right? So we looked at candlestick charts. Okay, but now let's go deeper and analyze candlestick patterns, right? Now we're not going to be discussing all of them, but let's go through a few basic ones and some of the most important ones which occur the most frequently on charts. Okay, so as we discussed about candlesticks, right? Very quickly, let's just review. If we have a red candle or a green candle, right? We discussed that this is the opening, right? This is the closing. This is the high price and that's the low price. And in a green candle, high and the low are the same. This is the closing and this is the opening price. Okay, now that we've understood the open, high, low, close of the candle, okay, we also learned that it is a red candle because it opened higher and closed lower, and it's a green candle because it opened lower and closed higher, right? Now this part, this red part that you see, okay, that is called the body, right? That is called the body, and these lines that you see, right, these are known as wicks, or you can call it the shadow. Okay, you can either call it a wick or a shadow. Okay, so this is basically the breakup of a candlestick. Okay, so the big colored portion is a body, and the lines that you see on the candlestick are the shadow or the wick, okay, for a green candle or a red candle. So now let's look at different type of candlestick patterns. The first one we have is called a doji. Okay, and a doji on charts will look like a plus sign, or you might see one like this. Okay, it might be a red one or a green one. Now the reason it looks like a plus sign is because the opening price is the same as the closing price, right? They're identical, or the opening price is very close to or very near to the closing price, right? And that's why they look like a plus sign. So the basic definition of a doji is that the body, right, is equidistant from the high and the low, means it's right in the center. Okay, basically what this candlestick is defining is indecision. Okay, why is that? Because let's say it opens here and it starts to go down, right? It goes down and bears push the price down, right? Sellers push the price down, and so now the bulls, the buyers, take the price higher. They take the price higher all the way till this level. Now what happens here again? Sellers come in and take price lower and close the price here, right? So you can see that there's a tug of war going on between the buyers and the sellers. There's an indecision going on, right? They're basically in a fight, in a battle, trying to win the battle, right? But in the end, nobody has come out a winner. Okay, so basically what happens is when you see this, let's say in an uptrend, right? You see price going higher, and you see price going higher and higher and higher, and all of a sudden you see this doji at the top of the trend. So what is that saying? At the top of the trend, there's a fight going on between the buyers and the sellers, right? And so if the next candle is a nice big red one, guess what happened, right? The sellers came out as winners. The sellers came out as winners, and so That's a big alert as to sellers wanting to take control now, right? Sellers are trying to take control, and this big red bar confirms that. And so you might see a trend reversal from the top, right? And the same thing can happen in a downtrend. Let's say price is going down, going down, going down, going down like this. And all of a sudden, at the bottom of the trend, you see a doji pattern like this. So what is it saying? Alert, right? It's giving a big alert and saying price may reverse from here. Why is that? Because there's a tug of war going on between the bulls and the bears, right? There's a fight going on. And so one or the other is going to come out as a winner. So now if you get a big green bar like this, big green candle after, right? So that is saying bulls have control now, and they may reverse the price. Okay. Now the other way might also happen, right? Let's say that the bears come out as winners, okay, like this, and so the trend will continue, right? So all we need to keep in mind is whenever we see a doji pattern like this, we need to be alert, because there may be a chance that price may reverse from that point, right? So we need to be alert. So whenever you see a doji, think of indecision and just be alert. All right, let's come to the next candlestick pattern, which is one of my favorites, and it is called a hammer. Okay, it can look like this. It can also look like this with a wick at the top end. Okay, and now we also have inverted hammers. The complete flip side. Okay, these can also be called pin bars, right? But for simplicity's sakes, let's just name them hammers. Okay, now hammers are very, very important, right? They're a very good trend reversal candlestick pattern. Okay, now how is a hammer defined? If you see the body, it is generally 1/3 of the entire candlestick. Right, so the body is 1/3 and the shadow or the wick is 2/3. Okay, and these are generally very good trend reversal candlestick patterns. So let's understand how. So now let's say that we are in a nice uptrend, okay, and you get a hammer at the top, right? So again, we need to be alert. We need to be alert because hammer is also a signal which basically says that there's some indecision going on right now. And why is that? Because if you see here, let's say price opens here, right, and it starts to come down. Bears come in and they start to sell the stock, right? And so they take price lower, and now here all of a sudden buyers come in and say, no, we're not going to let you take price lower, and so they take price higher and they close price right here. So again, bears are selling from the top here and buyers are buying from the bottom here, right? And so basically there's again a fight going on between the buyers and the sellers, and they both are not allowing price to go anywhere. So this is a big signal of indecision, right? And so followed by this, we may see a trend reversal, meaning price may reverse like this. Now, what makes this case even stronger, case for a reversal, is if we see an inverted hammer in this place. Right? If we see an inverted hammer here, this is an even stronger signal of a trend reversal. Okay, now why is that? And one very easy way of remembering this is wherever you see the body, okay, this red portion, simply just draw a down arrow like this. Okay, if you draw a down arrow like this, you can clearly see that this turns into a down arrow. And if this is pointing down, that means it is pointing for price to move lower, right? So whenever you see either of these at the top of a trend, okay, it is a good sign that price may reverse, right? And the same thing if price were in a downtrend. Right? If price is coming down, down, down like this, and then at the bottom, we see this. Let me move this here, right? We see either of these candlestick patterns. This is a very, very good sign that price may reverse from here and start to move higher. Okay, again, keeping this arrow in mind, right? So this signal, right, in a downtrend and this signal in a uptrend are very, very strong signals, right? Even though this one and this one, they indicate indecision, right? But the arrows, right, this down arrow is a much stronger signal and this up arrow is a much stronger signal for a reversal, right? And we'll be looking at some examples. We'll go to charts and look at some examples, right? And if you have both of them together, right, many times you will see both of them together at the top of the trend or bottom of the trend. That is a very, very strong signal, okay, that price wants to reverse, right? So this is the hammer pattern, a very, very strong candlestick pattern, works beautifully well, and we'll see how. Now let's go to the third candlestick pattern, which is known as our engulfing pattern. So in this we have two types. We have a bullish engulfing and we have a bearish engulfing pattern. Okay, so by definition, an engulfing pattern is nothing but a candle whose body encompasses the preceding candle, the previous candle. Okay, so if you see this green colored body is much greater than this red colored body, so that is known as a engulfing pattern, a bullish engulfing. And this is known as a bearish engulfing because this red body is much larger than the green body. Now keep one thing in mind, we're just comparing the bodies here, right? We're not looking at the high or the low. So if this red candlestick was like this, where the high and the low were greater than this green candle, this is still considered as a bullish engulfing. Why? Because we're looking at only the bodies and not the wicks, not the high and the low. Okay. So now where do we want to see bullish engulfing patterns? We want to look at bullish engulfings at the bottom of a trend, right? So if I'm in a downtrend and price is constantly just going down, 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 and at the bottom of the trend I get this bullish engulfing pattern. What is that saying? That is telling me that buyers have started to enter, right? And they want to reverse the trend higher, right? They want to change the trend and move price higher. Okay. And same thing with a bearish engulfing. I want to see this pattern at the top of the trend, topmost of the trend, right? If I see a bearish engulfing at the top of the trend, right, this is telling me that heavy sellers are coming in at the top and that they want to reverse the price and take it lower, right? So this is a very, very good trend reversal candlestick pattern. Okay, and it works really well on charts. So guys, let's do one thing. Let's quickly come to charts and see how these candlestick patterns work. So now, can we clearly see here that we are at the top of the trend, right? We are at the topmost of the trend now. Okay. So if I see some reversal candlestick patterns, right, I may look to take an entry. So now here at the top, I can see inverted hammers, right? And what do they indicate? Down arrow, down arrow. Okay. And you can see price very clearly starts moving lower. If you see this one at the top, right, that's at all-time high, right? As of now, that's Nifty at all-time high, and we get this big red candlestick. Okay, that's a strong signal, guys, that sellers have come in at the top and now they want to take price lower. If you see here, what are we starting to get? Inverted hammer followed by doji. So we're starting to get some indecision, right? See, if you see in this frame, this is the top most of the trend. So now we're starting to get some indecision, okay, followed by bearish engulfing pattern. And what do we know about the bearish engulfing? We want to see it at the top of the trend. So this is at the top of the trend, and if you see, next few days market moves lower. Now see this pattern here. What happened? Market was down, 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 and then all of a sudden we get this inverted hammer, right? And what do we know about inverted hammers at the bottom of the trend? Indecision, right? And if you see the next candlestick pattern, next candle was a nice green one. Means there was a fight that took place here, and then bulls won that fight, right? And they took over. And see how price rallied after that. Now let's see this one. Price was going up nicely, 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 and then at the top of the trend we get a doji, right? So what does this say? Again, indecision, tug of war, and the next day bears won that battle and they took price lower. Again, if you see here, price started to come down, 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 and at the bottom of the trend we get this nice doji pattern, okay, indicating indecision, and finally bulls came out as winners and took price higher. Here, if you see this bullish engulfing at the bottom of the trend, and price rallies after that. Okay, if you see here at the top of the trend, we have doji followed by a hammer, doji, so a lot of indecision, and eventually bears come out as winners and take price lower. Again, if you see here, price starts to come down, 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 and then all of a sudden we get this hammer, okay, and hammer indicates what? Up arrow. So up arrow, and you can see how price goes higher. Again here, you can see this bearish engulfing, where? At the top of the trend, right? That's the topmost of the trend, bearish engulfing, price comes down. You can see here at the bottom of the trend, we get nice buying happening here, right? Fresh buyers come in and price starts to move higher. Okay, if we see this, Nifty was at its all-time high in 2018 here, right? So what do we get here? A lot of indecision, doji, hammer, doji, followed by big bearish engulfing, and see the down move we got after that, right? All we have learned is 3 candlestick patterns, and we have come across so many trading opportunities. Okay, and this does not just apply on the daily time frame, guys, right? We can use this on the monthly, weekly, we can use it on the hourly, 15-minute, intraday time frames, whichever one you want, right? Whatever kind of a trader you are, you can use these patterns for that particular time frame. Okay, now if you want, to take this more advanced and you want to learn more patterns, you can look up this fellow named Steve Nyson. Okay, he has really explored the study of candlesticks and gone through many more candlestick patterns. I stick to these 3, right, as they work the best in the markets, and I like to keep things simple, right, guys? I like to keep things simple, and so I find these 3 candlestick patterns to work the best. They occur the most frequently, right, as we just saw so many examples. So I like to keep things simple. Okay, so if you want to explore more of this, I have a lot more material. I have a lot more study material on this, so I can share that with you. Fine, so we'll end this here, and we'll move to the next